Welcome back, finance fans. Today we're diving into one of the biggest debates in investing. Should you still invest in individual stocks when index funds and ETFs seem to dominate everything? You've probably heard people say, just buy the S&P 500 and forget about it. But what if I told you there are still powerful reasons why owning individual companies can be one of the smartest moves for building wealth long term? Here are 7 reasons why I believe it's still worth investing in individual stocks. Higher return potential. When you invest in an index fund, you're accepting average returns because you literally own a slice of everything, good and bad. But when you pick individual winners, think Apple, Nvidia, Amazon, Google, you give yourself the chance to beat the market. The truth is, most of the stock market's growth comes from a handful of companies. If you can identify great businesses early, with strong leadership, innovation, and financial health, your returns could be far above average. That's the thrill and the reward of stock picking. You're betting on excellence, not averages. Check out the returns of some of the most popular stocks compared to the S&P 500 over the past 5 years. You control what you own. When you buy individual stocks, you choose exactly where your money goes. You can support industries you believe in, like clean energy, artificial intelligence, or healthcare, and avoid ones that don't align with your values, like alcohol and tobacco. With most ETFs, you don't get that choice. You might be unknowingly invested in companies that go against your beliefs. Owning stocks directly gives you transparency and control. Dividend growth and passive income. Here's where things get exciting. Dividend-paying stocks. When you own companies that pay regular dividends, like banks, utilities, or blue-chip giants, you're earning a steady stream of passive income. Even better, many of these companies increase their dividends every year, meaning your income grows without you doing a thing. Over time, reinvested dividends can become a huge source of wealth, and in retirement, they could literally pay your bills. That's not just investing, that's financial independence in action. Learning and engagement. Investing in individual stocks turns you from a passive saver into an active student of the economy. You'll learn how to read balance sheets, follow market trends, and understand business models. This knowledge compounds just like money. The more you learn, the sharper your instincts become. Watching your companies innovate and grow is way more engaging than just holding a bland index fund. When you own individual stocks, you have total flexibility. You can buy more shares when a company dips, trim profits when prices soar, or exit when the story changes, instantly. No waiting for fund managers, no restrictions. That agility means you can react to market shifts faster and on your terms. Another overlooked benefit, tax control. When you own individual stocks, you decide when to sell, which means you control when you pay capital gains tax. You can also sell losing positions to offset other gains, known as tax loss harvesting. In a world where every dollar counts, that level of control could save you thousands over time. The joy of ownership and legacy. Finally, and maybe most importantly, there's something deeply fulfilling about owning a piece of a company you admire. Whether it's Nvidia driving innovation or a local bank serving your community, being part of that story feels meaningful. It's not just numbers on a screen, it's ownership, belief, and legacy. When those investments grow, you're not just building wealth for yourself, you're creating something that can be passed down to your kids and grandkids. So there you have it, 7 reasons why investing in individual stocks still makes sense. It's not about abandoning index funds, it's about combining both strategies smartly. Please keep in mind that individual stocks are generally riskier than most index funds, and it requires more homework. You must stay up to date on quarterly results and financial news. If you are up for that, individual stocks could be right for you. If you enjoyed this video, make sure to like, subscribe, and comment below. What stocks are you most excited about over the next 5 years? Thanks for watching. Until next time, keep earning, keep saving, and keep investing.